Hello, my name's Jo Townsend. I'm General Manager Investments at Rest Industry Super. Well, Rest has continued to deliver strong returns to its members. For the core strategy, which is our My Super investment option, we've delivered a return for 2013-2014 of 13.29%. That follows a very strong year, 2012-2013, where the return was 18.42%. Most importantly though, these returns build on our strong long-term performance for Rest members. So our focus is very much on delivering long-term returns for Rest members. For the core strategy, we have an investment objective of delivering a return of 3% above the rate of inflation over a rolling 10-year period, so as to grow the retirement income of members over the longer term. We have an active investment management approach, which means that we are continually reviewing and assessing our investment arrangements. It's not a set and forget approach. It's an approach which we've used for a very long period of time and which allows us to manage risk and capture market opportunities when they arise. So asset allocation is simply the decisions that we make with regards to how much of the fund we are going to invest in the various investment markets. So for example, how much will we put in Australian shares versus international shares versus property, infrastructure, cash, and the other asset classes that we invest in. So an active investment strategy can result in a better return for members because we are continually reviewing and monitoring our investment arrangements. It's not a set and forget strategy. We are able to manage risks and capture opportunities as they arise. Well, over the past 12 months, I would describe the markets as being quite buoyant. We've seen strong returns for both Australian and overseas shares. The Australian economy remains resilient despite the expected decline in mining investments and softer consumer sentiment following the federal budget in May. So the backdrop for strong share market returns over the past 12 months has been an environment where we've seen extremely low interest rates now for a number of years. That, combined with signs of rising economic growth, has certainly helped to lift share market returns. Returns for other asset classes such as bonds, property, infrastructure and cash have also been positive over the past 12 months. Australian economy remains resilient and interest rates remain stable. But a slowing of Chinese growth could see a moderation in demand for Australian exports, and that could weigh heavily upon our economy. Well, the reality in investing is that no one has a crystal ball. But what we do have at Rest is an investment philosophy and an approach that has certainly stood the test of time. By using our active investment approach, we have been able to deliver strong long-term returns for Rest members, and we believe that we are well placed to continue to do that into the future.